friends, come to this particular question, and that was this particular question is a very typical question and a very, what should I say, not what should I say, a very good question from the tax law point of view, because then we got to make a lot of assumptions and this and that. And so I'll just follow the answer, the methodology which is followed by the institute to solve this particular question, and I'll follow the same methodology. However, to some of the points I disagree, but see, my disagreement is also a little bit unfair. I will tell you, it is unfair because question is like that. I mean, I have no objection to anything, but I have to use the question data and use the question data to give the answer. Okay, so to that extent there are limitations. In real life we may not have such limitations, but you have to just go with that. Now, see, in this particular case, associate has got a textile and the operation of a cold chain facility. So 35 AD comes into the picture here, which is a specified business, and section 35 AD is an optional provision. Okay, so you should have opted for under section 35 AD. So any specific thing not given to us, so let me assume that you have already opted for 35 AD under this particular mechanism. Now in this case, profit from textile given, profit from operation, and everything is given. Okay, so I will have to do normal computation, and thereafter I'll have to do carry forward set off. I will have to do carry forward set off based on this all other information. This cold chain facility last year. So this cold chain facility last year, whatever is the carried forward loss, if any, I'll have to do the set off in the current year, and this particular adjustment is going to become a problem. Reason being that I want a separate figures of profit and loss of the textile business and the cold chain facility. That means 35 AD losses. 35 AD losses in the carry forward set off can be adjusted only against 35 AD losses, 35 AD profits. Okay, so I should know that in the current year whether there are any profits under 35 AD or there are no profits under 35 AD. So what I want is, I want a separate numbers of 35 AD loss or profit as the case may be, but that is something which will be becoming very difficult because the data which is given to me is a total data, or it is a composite data, something like that has been given to me. Now, for example, profit and loss, this figure has been given to me separate. Now, interest on capital is to this particular partner is 100. Now, here, how am I going to break up between textile and 35 AD? How am I going to do that? Now, for example, partners remuneration, how am I going to break up between textile and 35 AD? You understood what I'm trying to say? So, in such a situation, friends, these kind of breakups will be very difficult, and for that, some basic understanding or assumption that we have to follow. Okay. Now, before I go ahead, I will tell you that in one real life exercise, I'm telling you, real life exercise. If there are any businesses which are eligible for these special benefits, for 35 AD, Section 80 IB, etc. provisions, the specific business is eligible for advantage under the law. Okay, such businesses, as a matter of tax planning, should always be kept in a different form of entity altogether. That means there should be a separate company which is doing only that particular business, so that in the tax assessments you do not have any complications. Okay, so such eligible businesses, that why I say, as a matter of tax planning, one advise that if at all any question asks you, you should give that you should keep it in a separate legal entity altogether, and that legal entity should do only that business which is eligible business. And therefore, you will never have any complications from taxation point of view regarding computation of common cost, common incomes and other incomes and all that. You will not have any complications. So that is one of the advice that you have to follow. Now, in the preceding year, in the last year, they have already got this cold chain facility. Okay, and they had this textile business. So first of all, I will do the last year computation to know whether there is any carried forward loss or not, something like that. Okay, now cost of construction of the building machinery is 75 lakhs. Income from textile is 12. Okay, so I will consider textile separately, that is 12. Okay, and income from cold chain facility is 60 lakhs. So 35 AD last year I have a clear number. Income is 60. Okay, before deduction of 35 AD, and under 35 AD the cost of land is not allowed, and the cost of construction of building is allowed. So minus 75, so 15 lakhs is the loss. Okay, of the last year. Now in the last year, firm originally had 4 equal partners, and one of the partner has already retired. Okay, now Section 78. Section 78 is one of the carry forward set off provision. specifically with respect to a partnership firm. Okay, and section 78 is a very beautiful piece of law. In detail also I will discuss, but in a different chapter altogether. However, right now I will give you the hardcore overview of that particular provision, where a change has occurred in the constitution of the firm. I repeat, change has occurred in the constitution of the firm. Okay, and this particular chapter, that means carry forward set off, shall entitle, okay, nothing contained in this particular clause shall entitle the firm to carry forward and set off so much of the loss proportionate to the share of the retired or deceased partner as exceeds his share of profit in the current year. Okay, so the proportionate loss of the retired or deceased partner will not be allowed to be carried forward and set off as per this particular provisions. Okay, now our partner in a particular year has already retired. See, at the end of the year, he is already retired. There are 4 equal partners. Okay, and one of the partner has already retired. So how much is his share in the current year's profit? But now what I'll have to do is 35 AD, I have to separate it out. Okay, because 35 AD is a separate carry forward set of provisions. So now I'll have to think about only 35 AD. Okay, under 35 AD, his share of profits and his share of losses. Okay, so in the given situation, the net figure only I will use for the sake of calculation. 4 equal partners, that means 1/4. Nothing shall be entitled. I repeat, nothing shall entitle the firm to take the advantage of these particular provisions. Okay, and 1/4 of 15 will be disallowed for carry forward set off in the preceding year. So 1/4 is 3,75,000, and so the carried forward loss from the last year to the current year will be 11,25,000. Okay, for the purpose of set off in the current year, if any. So 35 AD losses, brought forward loss, that way you can say, is now 11,25,000 rupees. That is the first understanding of the preceding year. Okay, so these numbers you have to keep it in the back memory. Okay, now in the current year, you want to see whether this specified business is having incomes and all other setup. Okay, so first of all, I will tell you how will I follow the methodology. Okay, I will do the total computation first of all. So I will do textile, listen, textile plus 35 AD business. Okay, I will do the total computation. Then I will also use all the relevant data which is given to me in the question of a textile business. Okay, I will do all, because see, section 40B adjustment, I cannot do it with respect to every business like that, because this is aggregate limit, overall limit for all the partners for the entire year taken together. So 40B calculations are to be done on a totality basis only. It cannot be done with respect to individual business. Okay, 40B remuneration. Interest, again, I may think little bit differently, but with double mind, I will do that. Okay, so first of all, I will get the total income including textile and 35 AD. Okay. Okay, after that I'll have to do the carry forward set off of 35 AD. 35 AD carry forward set off, because 11,25,000 which I calculated. Okay, this I will do that particular set off. But before I do this particular set off, I have to ensure that my income has a sufficient profits out of 35 AD. So I should know whether income which includes 35 AD income, it is sufficient figures or not. For that, I'll have to do one small little jiggery. I will say that income, okay, minus the textile business income. I will assume that that much is my 35 AD income. So I have a sufficient income to do the set off, or I do not have sufficient income to do the set off. That decision I'll have to take separately. Okay, and that's the reason in the second column I'll put the textile numbers. Okay, just to separate 35 AD and textile income, I would like to do it like that. Okay, so let's start with the total figures straight away. This methodology, once you have understood, so textile plus 35 AD and textile, I'll keep it separately. Now, first of all, it is textile and cold chain facility. So it is 10,25,000, 20 lakh 50,000. Textile is only 10 lakh 25,000. Okay. Following items have been debited to the profit and loss. So interest on capital. Okay. Interest on capital payable on 100 lakhs, 15%. Okay. So that is already debited. So how much is the total interest coming to? 15 lakhs. Interest add 15 lakhs. Okay. Now out of this particular 15 lakhs, how much would be for the textile? Okay, so that will be a confusion. But I'll just, as I said, that I'm going to follow the institute methodology. So what institute is doing is this textile and this ratio they are using. Okay, so this is 1:2, like that they are doing. So supposing if the total is 15 lakhs, there will be 5 here, 10 here, and total will be 15. Like this they are doing. So for textile, they will allocate 5 lakhs as interest on capital. So that will be added. Thereafter, similarly for 40B deduction also they will do. But right now I'm going to add total interest, total remuneration. Okay. This is how institute is doing. So I'm just following that. Working partner salary 36 lakhs, 1 lakh each per month for 3 partners. So add total 36 lakhs first of all. Okay. Now this salary, I cannot do anything for textile. That how much for textile? Because salary is for the work. No, it is not directly linked to that. So here, because I am handicapped, I will not do any allocation for textile. Okay. Then depreciation on the textile factory building is 5 lakhs. Depreciation on plant and machinery is 35 lakhs. So book depreciation add. Okay. So add 5 lakhs. Add 35 lakhs. Okay. Now, Women's insurance policy premium is anyway allowable, so there is no adjustment required. Then depreciation as per section 32 for the year is this. So tax depreciation less, 27 lakhs and 4 lakhs. So less, book depreciation at tax depreciation less. What the big deal? Minus 27 lakhs, minus 4 lakhs. Okay. However, when it comes to the textile, it was plant and machinery for the textile, depreciation on textile. So it was clear adjustment given for the textile. So for textile also I will repeat the same numbers. Okay. So plus 5 lakhs, plus 35, minus 27, minus 4. Okay. Same thing that I will do. Just take the total, 90 lakhs 75,000. From that, the section 40B interest. Now interest will be allowed to you only at the rate of 12%, but here it was 15%. Other things you assume that it was authorized by the partnership deed and all that. So from this, let me erase this first of all. Partners interest 12 lakhs as per section 40B. Okay, after this 78 lakhs 75,000 from this remuneration. Okay, just calculate the limit, and I think at the limit is already more than 36 lakhs because 36 lakhs was the remuneration which was already given. So this 36 lakhs. Just calculate the limit, and remuneration is full 30 lakhs. 36 lakhs will be eligible. Okay. Then it will become 42 lakhs 75,000. Okay. Now comes the that particular real adjustment. Now these 42 lakhs 75,000 is something what is total 35 AD plus textile. Okay. So now from this 42 lakhs 75,000, now I'll do a working note. 4275 minus the textile, I will get 35 AD income. Okay, so I'll, after doing all this adjustment of textile, I'm getting income of 20 lakhs 25,000. So 4275 was total, and textile I'm getting 20 lakhs 25,000. So 35 AD income I'm getting is 22 lakhs 50,000. This is a working note, inside working note. Okay. Now 35 AD brought forward loss was some 11 lakhs an odd figure. So what I'm concluding that in 42 lakh 75,000, I have enough profit to absorb 35 AD losses. So I will do 35 AD loss adjustment fully 11 lakh 25,000 and balance is 31 lakh 50,000 income. This is your total income for the current year after doing the carry forward set off of 35 AD losses. Only thing that I have ensured that in the current year I have enough 35 AD profits. I have enough 35 AD profits to compensate for the brought forward loss set off adjustment, and thereafter my total income is computed. Now come to